Envision yourself in an Indian bazaar, gazing upon that latest electronic device you've been coveting. It's marked at a discounted price, but there's a slight uncertainty nagging at your conscience. What if the price reduces even more? Now, imagine if there was a way for you to secure that discounted price and make a decision to purchase later. This, in essence, is the principle of options trading. But instead of electronic devices, we're referring to shares or other financial assets in the Indian stock market. Options are contracts that provide you the privilege, but not the compulsion, to purchase or liquidate a share at a preset cost within a defined time frame in the Indian stock market. It's somewhat similar to booking a table at your favorite eatery in Mumbai. You get the option to dine, but you're not obligated to. There are two fundamental types of options in the Indian stock market. First, we have call options. These contracts offer you the chance to buy a share, like Reliance Industries or Infosys, at a set cost by a certain date. It's analogous to reserving the latest iPhone at today's price, with the knowledge that you have the right to buy it at the same cost later, even if the market price skyrockets. Then there are put, which are the other side of the spectrum. These contracts give you the authority to sell a share, maybe something like Tata Motors or SBI, at a specified cost by a certain date. It's equivalent to having the option to sell your iPhone at a promised price later, even if its market value plummets. So, why would one opt for options trading in the Indian market? Well, the benefits are multifaceted. Options in India offer leverage, providing the opportunity to control a larger portion of a stock for a smaller initial investment. It's much like paying a deposit on a house, instead of the complete amount up front, to the Indian financial ecosystem. Options are also a powerful hedging tool in the Indian market, acting as a form of for other holdings. If you own a stock in a local Indian company and fear its price might drop, buying a put option can secure a minimum selling price. Lastly, options foster speculation on stock prices fluctuating in the Indian market without the need for directly purchasing the stock. Although options trading offers an avenue for substantial monetary gain, it's not devoid of pitfalls, particularly in the Indian market. Options contracts in India carry an expiration date. If you don't exercise your right by this date, the contract ends up worthless, leading to the loss of your original investment. Furthermore, the complexity of options is heightened in the volatile Indian market. Numerous factors, some unique to the subcontinent, influence their prices, and deciphering these is pivotal for successful trading. Consequently, it's vital to conduct comprehensive research before plunging headfirst into options trading in India. Ultimately, options trading can be a potent financial tool, but understanding the heightened risks in the Indian market is paramount. Exploit online resources specific to India and seek guidance from financial advisors acquainted with the Indian market for information. Remember, knowledge is power, particularly when it comes to navigating the intricate world of options trading in India.